Time for Under 30. Today we're discussing TOST, an important kind of back office infrastructure for quick service restaurants and really just all types of restaurant services. Alex Coffey, Jenny Horn. Jenny, we talked about this one a lot with George, so I'm excited to get this update. This is a company that maybe the stock price doesn't show, but it seems to be making more and more inroads. If you get takeout somewhere, if you are in person, you're paying with your card, you just interact with this software more and more. And I know it's anecdotal, but sometimes that's enough to see technology taking hold.
Absolutely, and I do know that from a restaurant standpoint, I know people that are interacted with this interface that love it. So from that aspect, it is loved by those that use it. But here to tell us more on what is not so much the love for this name today, that's out of Mizuho, is George Tsilis, senior markets correspondent here for the network. So George, a price target reduction by almost half, also downgrading shares. Walk us through what you're seeing here as far as TOST goes.
Well, I can see, some of the analyst points here, guys, with their downgrade. Mizuho basically is downgrading the stock to $16.30, moving their rating on the stock from buy to neutral. And I can see their point to some degree, considering, inflation has really cut down on the ability for folks to go out and spend money from a discretionary spend standpoint to eat out. But at the same time, people are still going to need to eat, so you have to keep that in mind. I think they also made a mention of the aspects of TOST business, which I think it's, if you look at it from a technology standpoint, it's very commonplace. It's hard to go out and eat and not see their technology now. And that gives you an idea that their number of installations on a restaurant basis is increasing. In fact, if you look at their last quarter report, 85,000 installations, and if you go back and look 2 years, it was 50,000. So they're increasing their total installations in the last 2 years by about 65 to 70%, which is pretty remarkable. I think if you look at their software, not only from a front order management and ordering system standpoint, and of course payments and checkouts, I think if you look at their back end systems, which include things like labor management, time management, operations management for restaurants, that's a good sign for a company that's getting execution from their software, both on front end and back end. But I think their reliance on payment volume because of payment processing is one of the other areas that Mizuho's kind of frowning on. The other thing, if you look at their business as well, and you go to their website, which I did, they actually have capital funding to restaurants and, of course, small establishments. And I think that area of their business is another challenge that Mizuho brings up. So I can see the analysts point to some degree here. There is some softness and of course, people going out. But at the same time, you have to make a case, or you could make a case here, that the company's growth rate is still pretty remarkable considering this environment. And the stock has already fallen from around $25 to now in the high teens over the past few months or so. So I think there's merit in the call, but I also think that there's still quite a bit of room to the upside in the long term for this name.
Yeah, I thought it was interesting too, because oftentimes we marry companies to their core business. I thought it was quite interesting to see that they're in that financing world, George. How much is that kind of a risk, though, as this analyst lays out in the medium term, if this is more late cycle and we do see a downward trajectory of the economy? I can't imagine that this line of funding is necessarily the most stalwart of credit when it comes to that. If you're going, sort of through a service like TOST for that funding, maybe you're a smaller business, maybe you couldn't get it through a traditional small business loan, and you're going to a place like TOST, maybe at a higher rate. But is delinquency risk a real thing down the line if the economy does take a turn?
Yeah, I think there's always going to be delinquency risk, but TOST is essentially brokering capital. They're not necessarily funding it out of their own pockets. So I think that's what you have to keep in mind when looking at the risk associated with their capital funding division. I think volume is at risk because of capital funding not being able to be had because of higher interest rates. I think if their core business is still growing, which it is, that's really where you have to look at the value here for this name. And that has to do with their streamlining ordering and payments, front office or front end activity from a customer and business standpoint, but also their business to business back order systems for ordering food and managing labor. That's really, I think, the value here for this company.
Yeah, George, I think really well put, and obviously seeing some weakness today, but it seems like this name has definitely at least ignited interest from an analyst standpoint, but we will leave it there. Appreciate the breakdown, as always, George Tsilis, senior markets correspondent here for the network.